Well, good evening, everyone. My name is Jeff Green. Welcome to the Profitable Swing Trading YouTube channel that I just created today, and this will be my first video. And what we'll do tonight is take a quick look at the market for this week. We're going to look at three charts. We're going to look at ETFs of the VTI, which is considered the broadest ETF that follows the broadest number of stocks in the market. It actually attempts to mirror the Wilshire 5000 index. We're also going to look at the SPY, which is the S&P 500 ETF, and the QQQs, which is the NASDAQ 100. So we're going to look at three very important ETFs and see if we can determine what has to happen to make it safer to get back into this market on some swing trading. So what you see on the screen here is three charts of VTI ETF. The one on the left is the weekly chart, the one in the middle is the daily chart, and the one on the right here that I'm just scrolling a little bit is the intraday transactions. And the reason I like to use ETFs because you can also get volume information out of ETFs versus just the index by itself. So let's take a look at the weekly chart here on the left. You can see that it's been in a super uptrend for the most part since middle of March of this year. These lines are, the blue one is the linear regression line, and these two lines, the green dotted one and the red dotted one, are a single standard deviation away from the linear regression line. So that attempts to capture 65% or so of the moves of this particular index. So let's take a look at where we are. You can see since early to mid-April that the tops have been sort of slowing down. Let me make that a little bit brighter for you here. Has been sort of slowing down, and it looks like it's getting weaker. The volume here has been increasing on down days, which also is indicative of a weakening market. The MACD shows a bearish divergence, which is lower highs versus higher highs on the index. You see this spot here is higher than this one. That shows a weakening trend. And also the detrended price oscillator is moving down and showing the same bearish divergence. So that's what's happening on the weekly basis. It's definitely getting weaker. And you can see quite clearly, if I stretch this out a little bit, that we're right at a pretty critical support level here. Let's move to the daily chart. You can see that we had a good day on Tuesday, but then the sellers returned with a vengeance Wednesday, Thursday, and let's see, Monday, Tuesday, Wednesday, Thursday, Friday. So Friday was the biggest down day, which was, of course, today. You can see that we're right at that first standard deviation line from this blue line, which is the same as this one on the weekly charts. So we're close to a level of support. Whether or not that'll hold for next week, who can tell? You can see the MACD has really turned down with a bearish divergence here. The on-balance volume has turned down, and also the detrended price oscillator is almost below the zero, which is not a good signal. So what we would need to see in order to reduce risk for taking on new swing trades in the market next week, whoops, hold on, let me fix that. We would need to see the 3-day, which is this red line, move back above the 8-day, which is the green line. And that's typically my 3x8 strategy. And it works amazingly well to tell you when there's strength in the market and when there isn't. It also helps you get out on swing trades. So this right-hand chart here, this is a intraday chart of the action on the Vti ETF today. And you can see it's just a horrible day. It jumped up, looked like it was going to be real positive, and then just sold off, had some buyers come in right before the lunch hour, and then just relentless selling all the way to the end when it closed at its low. So what you want to do here is look at the first half hour and not buy any stocks until it gets past 8 o'clock market time. You see it never made it above that opening range. So that's a very weak chart. Like I say, for next week, we'd have to get that 3-day above the 8-day to give us some confidence that we're going to get back on a fairly solid upward trend on the daily chart. So let's take a look at the SPY here. This is the ETF that reflects the S&P 500. You see the same sort of thing. You see a tapering off of strength on the weekly chart. You see a big down day today on the daily chart today. And this is probably the first level of support that you really get to. It's not even close to the first standard deviation. But if you draw a trend line from here up, you could say that it's almost at a level of support. like right in here. Now, I'm not sure I buy that. You're going to need to get this 3-day above the 8-day again before we see some strength come back to the market. What makes me real nervous are these huge volume days on pretty severe down days. That's an indication of some pretty serious selling from institutions coming into the market. Another look at the intraday. Again, like the VTI, you can see it jumped up and then just ferocious selling all the way to the end. Okay, so that's the S&P 500. Let's look at this at the triple Qs, which is the NASDAQ tech-heavy index. So essentially the same story. The weekly chart is weakening. You've got these extremely higher volumes on down weeks, which is not a good sign. You've got bearish divergences on the MACD. On the daily chart, you can see we're a little bit closer to what I would consider a support level, but way above the first standard deviation line. So this is again another weak chart with high increasing volume on down days, which shows you clearly that sellers are moving into the market. And the MACD really seriously going negative here and driving downwards. Let's look at the intraday chart, and there's nothing new here. We started on a pretty good start. The intraday range ends right about here. We never got above it, which might have helped us try and put in a bottom. But then just relentless selling in the afternoon until the close at the end. So what we're looking here for, I'll reiterate, on all three of these indexes, we're really looking for that 3 to get back above the 8 with the price moving up also, and potentially some increasing buying volume coming in before I think all the risk is removed from the market. I'm not saying that this market is dead. There's just too much money out there to wrap this market up and look for bear market yet, but I think there's risk coming into the market. So I hope that helps. I hope everybody has a wonderful weekend, and we'll chat with everybody next week.